Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. Bitcoin miner considers buying landfill to recover $768 million in lost BTC. Scaramucci, Bitcoin should have hit $100,000 in 2022, ETF delay caused market damage. Polkadot unveils innovative JAM course to empower the next generation of Web3 developers. GameStop stock surges as CEO's photo with Michael Saylor fuels Bitcoin adoption rumors. MicroCloud Hologram unveils $200 million investment plan in Bitcoin and digital assets amid robust crypto outlook. Bitcoin miner considers buying landfill to recover $768 million in lost BTC. Early Bitcoin miner James Howells is exploring the possibility of purchasing a public landfill in Newport, Wales, where he claims a hard drive containing 7,500 BTC, now worth approximately $768 million, was accidentally discarded in 2013. Despite facing multiple legal setbacks, Howells remains determined to recover what he believes is a fortune buried under tons of waste. Legal battle over landfill access. In a recent legal bid, Howells sought a court order to either excavate the landfill or receive $609 million in compensation from the Newport City Council. However, the High Court ruled against him, stating that too much time had passed and that local laws grant the government ownership rights over any discarded property. Newport authorities also announced plans to shut down the landfill during the 2025 to 2026 financial year and repurpose sections of it into a solar farm. The lost Bitcoin story. Howells, a computer engineer, claims that his former partner mistakenly disposed of his hard drive containing 7,500 BTC during a routine cleanup in 2013. At the time, Bitcoin was trading for just a few dollars, making the loss seem insignificant. However, with Bitcoin now valued in the six-figure range, the lost hard drive could be worth over $1.2 billion by 2026. Assuming BTC's upward trajectory continues. Howells' plan to recover the Bitcoin. Despite repeated denials from local authorities, Howells has hired experts to analyze the landfill, estimating that his hard drive is likely buried in a 100,000-ton section of the 1.4 million tons of waste on site. Offered the city council a share of the recovered funds in exchange for excavation approval. Explored legal avenues to challenge the government's ownership claim over the lost BTC. Could Howells buy the landfill? Following the court's rejection of his claims, Howells is now considering an alternative approach, purchasing the landfill outright to conduct his own search. In an interview with the BBC, Howells expressed shock at the council's decision to shut down the landfill for environmental reasons, given its previous stance that excavation would be too disruptive for local residents. What's next? While Howells has not ruled out escalating his legal battle to the Supreme Court, his next move could involve securing private investors to help finance the purchase of the landfill site. With Bitcoin's price fluctuations and regulatory uncertainty surrounding ownership claims of lost cryptocurrency, Howells' decade-long quest remains one of the most unique recovery efforts in Bitcoin history. Scaramucci, Bitcoin should have hit $100,000 in 2022, ETF delay caused market damage. Skybridge Capital founder Anthony Scaramucci believes Bitcoin, BTC, is only now reaching the price level it should have hit in 2022. According to him, delays in the approval of a spot Bitcoin ETF significantly impacted Bitcoin's growth, causing prolonged price stagnation. Speaking on CNBC's Squawk Box, Scaramucci noted that Bitcoin's current price of around $98,000 is where it should have been 2 years ago, had regulatory progress not been stalled. ETF delay and market setback. Scaramucci argued that the U.S. Securities and Exchange Commission, SEC, should have approved a spot Bitcoin ETF in early 2022. Instead, the regulatory uncertainty led to a prolonged bear market throughout 2022 and early 2023. Institutional hesitation to enter the crypto space. Delayed mainstream adoption of Bitcoin as an investment asset. It wasn't until March 2024 that Bitcoin finally reclaimed the $60,000 level, signaling a full recovery. Trump administration's impact on crypto regulation. Scaramucci also credited the Trump administration with implementing favorable crypto regulations, which he described as middle-of-the-road and propitious for the industry. He believes that this pro-crypto stance has helped Bitcoin regain momentum and attract institutional investors who were previously hesitant due to regulatory uncertainty. Institutional adoption and Bitcoin strategic reserve. Scaramucci pointed to increasing institutional interest in Bitcoin, particularly from university endowments. Emory University disclosed a stake in Grayscale's Bitcoin ETF in late 2024. The University of Austin is considering launching its own Bitcoin investment fund. He also suggested that the U.S. could eventually establish a Bitcoin strategic reserve fund, similar to how it holds gold and other assets. Contrary to popular belief, Scaramucci noted that the U.S. Strategic Reserve already contains nearly 30 different assets, and Bitcoin could soon become one of them. Bitcoin's future price outlook. With institutional investment increasing and regulatory clarity improving, Scaramucci remains bullish on Bitcoin's long-term trajectory. He argues that Bitcoin is currently making up for lost time, and that the spot ETF approval, though delayed, has now opened the floodgates for sovereign wealth funds and hedge funds to enter the market. Additionally, Scaramucci revealed that sovereign wealth funds in the Middle East are already quietly accumulating crypto assets, positioning themselves for long-term growth in the sector. Conclusion: Bitcoin is catching up to its true valuation. While Bitcoin's recent rally has brought it closer to six-figure territory, Scaramucci believes that the market is still correcting from the setbacks of 2022. If institutional adoption continues at its current pace, Bitcoin could soon surpass the $100,000 milestone, reinforcing its status as a mainstream financial asset in global investment portfolios. Polkadot unveils innovative JAM course to empower the next generation of Web3 developers. Polkadot Blockchain Academy has taken a bold step to shape the future of blockchain innovation by launching the groundbreaking JAM course, an educational program specifically designed to cultivate the next wave of Web3 developers within the Polkadot ecosystem. This initiative is set to offer a practical, hands-on curriculum that delves into the core components of the Layer 0 blockchain, ensuring that participants gain the technical proficiency required in today's fast-paced digital landscape. A new era for Web3 developer training. The JAM course, short for Join Accumulate Machine, is Polkadot's latest effort to nurture top-tier technical talent and foster a community of skilled developers who are ready to tackle the challenges of decentralized technology. This initiative follows in the footsteps of previous educational endeavors by the Polkadot Blockchain Academy, such as the successful PBA Campus and JAM Tour, further cementing Polkadot's commitment to innovation and growth within the blockchain space. By reimagining the traditional approach to developer education, the JAM course is structured to provide an immersive learning experience. Participants will gain exclusive access to the essential building blocks of the Polkadot blockchain, including detailed explorations into the Layer 0 protocol that underpins the network's robust infrastructure. This strategic move aims to empower developers by bridging the gap between theoretical knowledge and practical application, a critical factor for success in the rapidly evolving realm of Web3 technologies. Expert Insights and Advanced Learning Modules. One of the course's standout features is its impressive lineup of expert instructors and industry veterans. Among these influential figures is Gavin Wood, the visionary founder of Polkadot, whose participation promises to enrich the learning experience with first-hand insights and real-world applications. His involvement underscores the high caliber of the program and the Academy's commitment to providing education that is both forward-thinking and practically relevant. The JAM course is meticulously designed to include advanced tutorials, interactive practical sessions, and dedicated Q&A segments, ensuring that learners are well-equipped to master the complexities of blockchain innovation. Key topics on the curriculum will cover essential aspects such as Solidity smart contracts, permissionless code execution, and the intricacies of rollups. These focus areas are crucial for developers aspiring to build app chains or deploy smart contracts that harness the full potential of the Polkadot network. Unleashing the potential of the DOT network. In addition to technical training, the JAM course provides a unique opportunity for participants to explore the expansive capabilities of the DOT network. This deep dive into the functionalities of the network not only demystifies the operational aspects of blockchain technology but also empowers developers to create innovative solutions that can drive the adoption of decentralized applications. The program emphasizes the importance of a flexible learning environment, where creative problem-solving and experimentation are encouraged, setting the stage for breakthroughs in Web3 development. The educational journey offered by the JAM course is not limited to passive learning. Instead, it is a dynamic blend of theory and practice that aims to instill a robust understanding of blockchain technology while simultaneously fostering an entrepreneurial mindset. Developers are invited to experiment, build, and iterate on ideas that could lead to the next big innovation in decentralized systems. Looking ahead, launch and registration details. Scheduled for an in-person launch in December 2025, the JAM course represents a long-term investment in the future of the blockchain community. Prospective participants are encouraged to register early, as the program promises to be a highly sought-after opportunity for those looking to advance their careers in Web3 development. Upon registration, individuals will receive periodic updates regarding application procedures, course schedules, and other essential information to help them prepare for this transformative educational experience. Polkadot Blockchain Academy's decision to roll out the JAM course is a clear signal of the increasing importance of specialized education in the blockchain domain. As Web3 continues to reshape industries and create new digital paradigms, initiatives like this ensure that developers are not only keeping pace with technological advancements but are also poised to drive innovation forward. Industry impact and future prospects. The launch of the JAM course comes at a time when the blockchain industry is witnessing unprecedented growth. With the increasing demand for decentralized applications and the rapid evolution of blockchain protocols, there is a critical need for a workforce that is adept at navigating these complex technologies. By investing in comprehensive education programs, Polkadot is positioning itself at the forefront of this transformation, enabling developers to harness the power of blockchain and contribute to a more secure, transparent, and interconnected digital ecosystem. The initiative also serves as an invitation to tech enthusiasts, developers, and entrepreneurs who are eager to explore the endless possibilities offered by Web3 innovation. As the JAM course unfolds, it is expected to not only elevate the skill sets of individual developers but also to catalyze a broader movement towards a more decentralized and resilient technological infrastructure. In conclusion, the unveiling of the JAM course by Polkadot Blockchain Academy marks a pivotal moment in the evolution of blockchain education. With its blend of expert-led instruction, practical training modules, and a focus on key technical areas, the program is set to redefine what it means to be a Web3 developer. As the Academy gears up for the course's debut in December 2025, the global tech community watches with anticipation, ready to witness a new chapter in the development of decentralized technologies. GameStop stock surges as CEO's photo with Michael Saylor fuels Bitcoin adoption rumors. In a move that has sparked intense speculation across financial markets, GameStop stock experienced a significant rally on Monday following an intriguing social media post by CEO Ryan Cohen. The widely circulated image, shared on platform X, formerly Twitter, features Cohen alongside Michael Saylor, the co-founder of Strategy, previously known as MicroStrategy. Although Cohen provided no accompanying details with the post, the photo has rapidly ignited discussions among investors about a potential strategic pivot toward Bitcoin and digital asset initiatives at GameStop. Unanticipated stock rally amid speculation. Market data from Google Finance shows that GameStop, GME, shares climbed nearly 7% on Monday morning, reaching approximately $26.39 at the time of reporting, a gain that translates to a 6.7% increase. This surge has been interpreted by many as more than just a fleeting market anomaly. Instead, it is being viewed as a possible harbinger of deeper changes within the company. The image of Cohen with Michael Saylor has particularly drawn attention because Saylor is renowned for his bullish outlook on Bitcoin and for spearheading significant crypto investments at Strategy. The absence of any explicit commentary from Cohen about the purpose or implications of his meeting with Saylor has only fueled further speculation. Investors are left to wonder whether this public display is a subtle indicator of GameStop's interest in exploring Bitcoin-related strategies or broader digital asset integration. As the digital currency market continues to evolve rapidly, the association with Saylor's crypto-forward reputation has added a new dimension to the narrative surrounding GameStop's future direction. Historical context and market dynamics. This recent development recalls GameStop's tumultuous past, most notably its role in the 2021 meme stock phenomenon. During that period, a collective of retail traders drove the stock price to unprecedented heights, forcing short sellers into a scramble to cover their positions, a process that infamously led to staggering losses for several hedge funds, including Melvin Capital, which reportedly suffered losses amounting to approximately $7 billion. The legacy of this event still looms large, serving as a reminder of the market's capacity for volatility when retail sentiment aligns with high-profile, unexpected corporate signals. Despite Monday's impressive jump, it is important to note that GameStop's performance this year has been mixed. Data indicates that the stock has been down nearly 14% in 2025, as the company struggles with the challenges of transitioning away from its core identity as a traditional video game retailer. The current surge, while encouraging, occurs against a backdrop of broader uncertainty regarding the company's long-term strategic direction. Many analysts believe that the recent spike could be a temporary uplift, a strategic maneuver aimed at regaining investor confidence amid an ongoing restructuring process. Investor sentiment and strategic implications. The reaction from the market following Cohen's post has been both immediate and palpable. Industry experts and market commentators have offered a range of interpretations. Some see the photo as a potential precursor to a new strategic initiative involving blockchain technology or digital asset management, a move that could fundamentally reshape GameStop's business model. Others caution that, without a formal announcement, the rally might merely reflect speculative optimism rather than a concrete shift in corporate policy. Given the prominence of Michael Saylor in the cryptocurrency sphere, his inadvertent endorsement, simply by being present in the shared image, has reignited discussions about Bitcoin's growing influence in non-traditional sectors. Saylor's track record with Strategy, which has been aggressively accumulating Bitcoin over recent years, lends a certain credibility to the idea that GameStop could be contemplating a similar approach. This prospect has resonated with investors who have been seeking positive catalysts amid the company's ongoing efforts to redefine its market presence. Looking back to look forward. Historically, GameStop has not shied away from the unconventional. Its transformation from a brick-and-mortar video game retailer to a symbol of retail investor power has been marked by dramatic price fluctuations and a willingness to embrace unorthodox strategies. The current situation appears to be an extension of that legacy. As GameStop endeavors to navigate the complexities of a shifting retail landscape, the possibility of incorporating elements of the digital asset ecosystem into its operational framework could offer a strategic advantage, particularly in an era where technology and finance are increasingly interwoven. The recent spike in stock price, catalyzed by a single social media post, serves as a powerful reminder of how modern communication channels can influence market behavior. While the long-term impact of Cohen's gesture remains to be seen, its immediate effect has been a clear signal of renewed investor interest. This incident not only underscores the volatile nature of the stock but also highlights the potential for innovative corporate actions to drive market momentum in unexpected ways. What's next for GameStop? As the market continues to digest the implications of Monday's events, many industry observers are keenly awaiting further clarification from GameStop's leadership. The strategic implications of potentially exploring Bitcoin or other digital assets could be profound, opening up new avenues for growth and transformation within the company. However, in the absence of an official statement, much remains speculative. Investors and analysts alike are calling for more concrete insights into whether this recent development signals a broader shift in GameStop's business strategy or is simply an isolated instance of market exuberance. In the interim, the mixed performance of GameStop stock in 2025 remains a cautionary tale. Despite the recent upswing, the company's long-term prospects continue to be debated as it seeks to reinvent itself in an increasingly competitive retail environment. The tension between its historical identity as a video game retailer and the emerging opportunities in the digital and crypto spaces is a central theme in the ongoing narrative of GameStop's evolution. Conclusion. In summary, the unexpected rise in GameStop stock, following CEO Ryan Cohen's enigmatic post featuring Michael Saylor, has set off a wave of speculation regarding the company's potential move toward Bitcoin adoption and broader digital asset initiatives. While the current rally reflects a temporary boost in investor sentiment, it also hints at a possible strategic recalibration that could redefine GameStop's future. As the company continues to grapple with the challenges of transitioning from its traditional retail roots, the interplay between emerging technologies and established market dynamics remains at the forefront of investor discussions. Moving forward, all eyes will be on GameStop's next moves as it strives to navigate a rapidly changing financial landscape and leverage new opportunities in the digital era. MicroCloud Hologram unveils $200 million investment plan in Bitcoin and digital assets amid robust crypto outlook. MicroCloud Hologram, a Nasdaq-listed technology service provider, has announced a bold strategic move to invest up to $200 million in Bitcoin and other digital assets. This major decision, revealed in a press release on February 10, underscores the company's bullish perspective on the cryptocurrency market and its commitment to capitalizing on the dynamic convergence of blockchain technology, computing, and artificial intelligence. A strategic pivot toward digital assets. In an era marked by rapid technological innovation, MicroCloud Hologram is positioning itself at the forefront of the digital revolution. The firm, which currently maintains cash reserves of approximately $257 million, is eyeing a substantial allocation of capital to diversify its investment portfolio. By targeting Bitcoin along with its derivatives, and extending its focus to securities derivatives of other digital assets, the company aims to mitigate risk while seizing growth opportunities in a market that continues to gain institutional traction. This planned investment is driven by the belief that the integration of blockchain technology, advanced computing, and artificial intelligence creates an environment ripe for innovation. According to MicroCloud Hologram, these intersecting fields not only present transformative opportunities in terms of technological advancement but also set the stage for new investment paradigms in what many are calling the new age of digital finance. Key aspects of the investment initiative. MicroCloud Hologram's approach is multifaceted and forward-thinking, encompassing several strategic objectives. Diversification of capital reserves. The planned investment of up to $200 million is expected to diversify the company's $257 million in cash reserves, enhancing its risk tolerance in volatile market conditions. Embracing market leaders, with major industry players like Strategy, formerly MicroStrategy, and Metaplanet also increasing their Bitcoin holdings. MicroCloud Hologram's decision reflects a broader industry trend. This cascade is further amplified by smaller companies from sectors such as healthcare and entertainment, all joining in on the digital asset accumulation. Leveraging technological convergence, the company emphasizes that the convergence of blockchain, AI, and quantum computing, particularly in the realm of holographic AI quantum computing, is central to its vision for the future. This intersection is seen as a key driver for innovative applications and robust market growth. Exploration of derivative markets. In addition to direct investments in Bitcoin, MicroCloud Hologram is exploring securities derivatives related to other digital assets, positioning itself to benefit from multiple facets of the cryptocurrency ecosystem. Market dynamics and institutional trends. The cryptocurrency market has experienced significant momentum in recent years. In 2024, Bitcoin reached an all-time high, soaring above $109,000 amid surging demand for spot Bitcoin ETFs and favorable regulatory developments. These developments have not only encouraged institutional investors to increase their exposure to digital assets but have also created an environment where the bull cycle appears poised to stimulate further convergence between the AI and crypto sectors. Analysts suggest that the current bull cycle could catalyze further innovation, driving the convergence of artificial intelligence and digital asset technologies. This synergy is expected to create a fertile ground for the emergence of new applications and investment opportunities, reinforcing the rationale behind MicroCloud Hologram's decision to commit a significant portion of its capital to this space. Implications for future expansion and innovation. The strategic investment in Bitcoin and related digital assets is seen as a pivotal move that will enhance MicroCloud Hologram's competitive positioning. By diversifying its investment portfolio, the company not only prepares for potential market fluctuations but also lays the groundwork for future expansion within the burgeoning blockchain and crypto landscape. The press release noted that this pivot is integral to the firm's broader plan for capital operations and future growth, as it intensifies its focus on digital currency market research and explores additional opportunities for technological integration. This move is particularly significant in light of the evolving global financial environment, where the integration of traditional finance with digital assets is increasingly becoming the norm. As the company embarks on this ambitious journey, industry experts and investors alike will be watching closely to see how MicroCloud Hologram leverages its newfound digital asset exposure to drive innovation, improve operational efficiency, and ultimately secure a leadership position in a rapidly changing market. Conclusion. In summary, MicroCloud Hologram's announcement of a $200 million investment in Bitcoin and other digital assets marks a transformative moment for the company. This initiative reflects a strategic response to the growing convergence of blockchain technology, computing, and artificial intelligence, a convergence that is reshaping investment landscapes across industries. By diversifying its capital reserves and embracing innovative digital asset strategies, MicroCloud Hologram is setting a new benchmark for technology service providers navigating the evolving world of digital finance. As the crypto market continues to mature and new technological synergies emerge, this significant capital allocation is expected to propel the company into a leadership role in the digital asset ecosystem. With an eye on future growth and a commitment to embracing cutting-edge innovation, MicroCloud Hologram's move may well be a harbinger of broader shifts within the industry, reaffirming the transformative potential of digital assets in the new age of investment.